Anyway, so let's start with the first strategy that that Maverick dentists are using. That is, they are looking at their write-off, specifically PPO write-off, as a marketing expense. We all, know that as inflation hit hard, dentists want to save every penny. They want to make sure that, as the expenses go up, they can still stay above water. But one of the mistakes I think a lot of people made for a long time, and of course that's changing, is they never realized that the number one expense, the biggest expense in their line item, is an expense they didn't even look at, which is the PPO write-off.
Yeah, most dentists would report, if you ask a dentist, if you look at your profit and loss statement, what is your single highest line item expense? And I believe that virtually every dentist on the planet would say my staff wages, my team member wages. As a percentage, that's my largest percent. And actually, that's not accurate, because that category has historically been the ADCPA, the Academy of Dental CPAs, and other very wise financial folks have said that if you can keep that expense to 28% or less, you'd be in budget for that category. But in reality, your largest expense item is one that's invisible on your profit and loss statement. That's the amount of money in your insurance adjustments, the amount you're writing off. Because today, in soon to be 2023, that number is 45 to 50%.
Yes.
And so last time I checked in my math, Naren, 45 to 50% was higher than 28%. But it never shows up on your line item expense because you're not actually spending it. So it's never shows up. It's even worse. Delta takes it. I'm going to use Delta because they're the 5,000-pound gorilla. Delta takes it before you ever got it.
Yes.
It's even worse. It's even worse. So maybe the breakthrough perspective for you is to start to look at your PPO write-offs as a marketing expense. Now, why would I say that? Because you are paying Delta to provide you patients. And you're paying, I'll use another word that should be highly motivational to any of our listeners. It's a tax.
Yes.
It's a very punitive tax for Delta to provide you patients. And that number is massive when you look at it. Now, you may not know what you're writing off, because if you enter your contracted fees in your practice management software, you can't run a report that will show you how much your insurance adjustments are. So Naren, maybe you could talk about the insurance write-off calculator that we put together.
Absolutely. So the insurance write-off calculator is something that hundreds and hundreds of dental practice owners have used in 2022. And what it is, it's really simple. We'll put a link in show notes. You have to answer 3 questions. Typically it takes 2 minutes. And even if you don't know the perfect answer, provide your best answer, your best guesstimate.
Close is good enough.
Exactly. Close is good enough. And then we will send you back confidentially your write-off. In other words, how much money are you writing off? So let me kind of explain the 3 questions we ask. So the first question is, what percentage of your patients are PPO patients? So again, if you don't know the exact number, guesstimate. If you think that's 80%, say 80%. So that's the answer you have to provide in the first one. What percentage of your patients are PPO patients? The second one is, what's your average write-off? So in other words, again, some might be charging you 58%. We saw that recently in Massachusetts, right? And in several other states, even 60%. So the average write-off, the way we define it is your usual and customary and reasonable fees. So let's say for crowns in your area, for someone with your skills, you are allowed to charge $1,000. That's your UCR fees, right? Versus the PPO firm doesn't allow you to charge $1,000. They'll say, well, you have to only charge $800. And then after $800, let's say they're only paying you $500. So your write-off is, in this particular example, 50%, because you could charge $1,000, but you end up getting paid $500. So $500 is 50% of $1,000. So that's the second question. What is your
easy way to determine that, Naren, would be to look at a couple of fees. Look at your crown fee, and look at, say, your adult profi fee, and simply look at your UCR fee, what it would be if you were charging UCR fee. And every practice will have some UCR patients that are uninsured. Just pick those 2 fees, profi fee, adult profi, and crown, and look at what the percentage is and enter that in line 2.
Perfect. The last question is going to be the easiest one, which is what's your collections in the last fiscal year? So if you're doing this in 2023, look at your 2022 numbers. If you don't know your 2022 numbers, just pick 2021. So whatever your collections is what ends up going into your bank account. So whatever that number is, in terms of total revenue, enter that.
And then the Excel spreadsheet is programmed to run the math for you to determine what you're writing off, and it's accurate to plus or minus 2%. So it gives you a very high degree of accuracy. And then we'll send that back to you so that you know. We'll put that in the show notes. So if you go to lessinsuranceDependence.com, click on podcast and scroll down to find this episode, and you'll find a link to that. If you don't know what you're writing off, this is going to be very valuable information, because you can't make good decisions if you don't have information. So you're going to love that.